Listen, I want you to picture something that happened last Tuesday morning at 9:47 a.m. Eastern Time in a sterile conference room on the 47th floor of a Manhattan office building. Her name is Margaret Chen. She's 52 years old, a portfolio manager for a mid-sized pension fund in Denver, Colorado. She's been trading precious metals futures for 17 years. She knows the COMEX rulebook better than most people know their own social security numbers. Margaret had $2.3 million worth of silver futures contracts set to expire in March. Standard stuff. She'd done this dance hundreds of times before. Take delivery of the physical metal, store it in the fund's allocated vault space, sleep well knowing her retirees had real money backing their pensions instead of paper promises. But at 9:47 a.m. on Tuesday, Margaret's phone rang. Her clearing broker, the same firm she'd worked with for over a decade, was calling with news that made her stomach drop through the floor. "Margaret," the voice said, "we need to talk about your March silver contracts. There's been a rule change. COMEX just moved the goalposts. Your contracts, they're not going to deliver. $2.3 million in silver contracts. Contracts that legally entitled her pension fund to 115,000 ounces of physical silver. Metal that was supposed to be sitting in registered vaults, ready for delivery. Gone. Not because the silver doesn't exist, not because she didn't follow the rules, but because the Chicago Mercantile Exchange Group, which owns COMEX, just changed the entire game in the middle of the fourth quarter." Margaret Chen discovered what 90% of silver contract holders are about to discover the hard way. The fix is in. The delivery mechanism has been systematically gutted, and if you own silver contracts thinking you can convert them to physical metal when the system gets shaky, you need to understand something right now. COMEX just pulled the rug out from under you. I'm about to explain exactly what they did, why they did it, and what it means for anyone holding precious metals contracts or thinking the futures market is a legitimate way to own silver. For the next 25 minutes, I'm going to walk you through the biggest rigging operation in precious metals history. And nobody, not your broker, not your financial advisor, not the financial media, is talking about it because they're all getting paid to keep their mouths shut. Before we go one word further, do me a favor. Hit that like button right now. I'm not asking politely, I'm telling you. Because YouTube's algorithm in 2026 has a documented suppression problem with precious metals truth content. The platforms make money from financial institutions that profit from keeping you in paper assets. Every like on this video pushes it into the feed of one more investor who still has time to protect themselves before the delivery shortage becomes a full-blown crisis. Subscribe to Power and Currency. Hit the notification bell. Join our community before big tech flips the kill switch on independent precious metals education entirely. We're building a network of real money advocates, and you're going to want access when the paper markets collapse. Now let me tell you exactly what COMEX did to Margaret's contracts, and why it's about to happen to millions of investors who think they own silver, but actually own nothing more than digital IOUs. The rule change came buried in a 127-page document released on a Friday afternoon in late January 2026. Classic government-style timing. Dump the bad news when nobody's paying attention. The document was titled Updates to Delivery Specifications and Warehouse Requirements for Precious Metals Contracts. Sounds boring, right? That's exactly what they were counting on. But buried on page 83, in subsection 4.2.7, was the kill shot. COMEX quietly changed the definition of eligible delivery for silver contracts. They added 3 new requirements that make physical delivery virtually impossible for 90% of contract holders. Requirement number 1, approved storage facility verification. Sounds reasonable until you read the fine print. To take delivery, you now need to prove you have pre-approved storage at one of only 7 COMEX designated facilities worldwide. Not your local coin shop, not a private vault company, not even most major bullion dealers. 7 facilities, total. And guess what? 6 of them are completely full, with waiting lists stretching 18 months. The 7th is in Singapore. Requirement number 2, financial institution backing verification. You need a letter from a bank or financial institution guaranteeing they'll handle the insurance and transportation. But here's the trick. 90% of banks won't provide this letter because it creates liability they don't want. They'd rather keep you in their paper products, where they collect management fees forever. Requirement number 3, minimum delivery quantity aggregation. Individual contracts used to be deliverable at 5,000 ounces each. Now COMEX requires minimum delivery quantities of 25,000 ounces. That means you need to own at least 5 contracts, worth roughly $650,000 at current prices, just to qualify for delivery. The small investor is completely locked out. Margaret Chen's pension fund had the money. They had 23 contracts, well above the minimum, but they couldn't get the storage verification because the approved facilities were full. They couldn't get the bank letter because their custodian bank suddenly updated their policies regarding precious metals logistics. Coincidence? Margaret doesn't think so. Stop the video right now. Go to the comments. Tell me honestly, do you own silver contracts? Do you own a silver ETF like SLV? Do you think you own silver because you bought shares in a mining company? I need you to understand something that's going to sound harsh, but could save you from losing everything. You don't own silver. You own a promise from people who make money by not delivering silver. Tell me in the comments, what's your silver position? How much do you think you own? What form is it in? We're going to analyze the exposure together because the comment section of this channel is where we build the real analysis. I read every single comment and respond to the serious ones. Now let me explain why COMEX made these changes, because understanding the motive is the key to understanding what comes next. The global silver market is broken, has been for years. Industrial demand from solar panels, electronics, medical equipment, and electric vehicle components has been growing at 8 to 12% annually. Mine production peaked in 2015 and has been declining despite record high prices. The gap between supply and demand is being filled by above-ground stocks, silver that was mined decades ago and stored in warehouses. But here's the problem. Those warehouses are running empty. The COMEX registered silver inventory, the metal that's available for delivery, has dropped from 180 million ounces in 2020 to roughly 35 million ounces today. At current delivery rates, they'll be completely empty by late 2027. Meanwhile, the paper market has exploded. There are approximately 250 ounces of paper silver claims for every ounce of physical silver in registered inventory. Think about that ratio, 250 to 1. If just 1% of paper silver holders decided to take delivery simultaneously, the system would collapse overnight. COMEX knows this. The big banks that control COMEX know this. JP Chase, which is the largest silver holder in the world, knows this. So instead of letting the market find its natural price through supply and demand, they rig the delivery mechanism to prevent anyone from calling their bluff. The goal is simple. Keep everyone in paper, keep the contracts rolling, keep collecting the fees, prevent price discovery, and when the physical shortage becomes undeniable, blame it on market volatility or supply chain disruptions, instead of admitting they sold 250 times more silver than actually exists. This is the largest precious metals manipulation in human history, and it's happening right now in real time, while regulators look the other way because the same banks that own COMEX also fund the political campaigns of the people who appoint the regulators. But here's what they didn't count on. Independent investors, people like you watching this channel, figuring out what they're doing and routing around the controlled demolition of the paper markets. The fix might be in, but the escape hatches still exist if you know where to look. Let me give you the 4 moves you need to make right now to protect yourself before this manipulation becomes a full-scale precious metals crisis. If you own SLV, SIVR, or any silver ETF, understand what you actually own. You own shares in a trust that claims to hold silver but won't let you audit their inventory. The prospectus specifically says they may hold silver-backed derivatives instead of physical metal. They may lend your silver to short sellers. And in a crisis, they can suspend redemptions indefinitely. If you own COMEX silver contracts, cash them out now while you still can. Take the profit or loss and move into physical metal. Do not believe your broker when they tell you that you can roll the contracts and take delivery later. Later is not coming. The delivery mechanism is being systematically destroyed. If you own shares in silver mining companies thinking that's real silver exposure, understand that mining stocks are not silver. They're stocks. They trade based on sentiment, management competence, political risk in mining countries, environmental regulations, and a dozen other factors that have nothing to do with silver prices. When the paper markets collapse, mining stocks might go up, or they might get destroyed in the general stock market chaos. Physical silver will go up because it can't go bankrupt. Move number 2. Buy allocated silver from dealers outside the COMEX system. Allocated means you own specific bars or coins that are identified by serial number and stored separately from the dealer's inventory. Not pooled, not fractional, not backed by silver. Actual silver that belongs to you and can't be lent out or hypothecated. The best dealers for allocated silver are companies like APMEX, JM Bullion, SD Bullion, and Money Metals Exchange. These firms buy directly from mints and refiners, not from the COMEX warehouse system. When you buy from them, you're pulling real metal out of the supply chain. But here's the critical part. Take physical delivery whenever possible. Don't store your silver at the dealer's facility long term. The goal of this entire operation is to own silver that's completely outside the banking system, outside the ETF system, and outside the COMEX delivery system. Silver that sits in your safe or in a private vault that you control. Move number 3. Focus on government-minted coins, not just bars. When the paper markets collapse and premiums spike, the most liquid silver will be government-issued coins like American Silver Eagles, Canadian Maple Leafs, Austrian Philharmonics, and British Britannias. These coins are legal tender, they're harder to counterfeit, and they're more widely recognized by coin dealers and private buyers. Yes, coins carry higher premiums than bars, but when COMEX defaults and paper silver goes to zero, The premium on physical silver could be $20, $30, or $50 per ounce over the manipulated spot price. The extra $3 you pay for a silver eagle today will look like pocket change when physical silver is trading at massive premiums to the artificial paper price. Move number 4. Understand the timing and scale your purchases. The COMEX delivery crisis will probably unfold over 12-18 months, not overnight. But once it starts, physical silver will become much more expensive and harder to find. The smart money is positioning now, before the shortage becomes obvious to everyone. Dollar cost average your purchases. Buy a fixed dollar amount every month rather than trying to time the market. If you can afford $500 per month, buy $500 worth of silver coins every month for the next year. If you can afford $2,000 per month, do that. The goal is to accumulate real metal at today's artificially suppressed prices before the manipulation ends. Save this video right now. Bookmark it. Because when COMEX announces the first major delivery default, and they will, you're going to see silver prices gap up $10 or $15 per ounce in a single day. Physical premiums will spike. Delivery times will stretch to months instead of weeks. The silver you can buy today for $26 an ounce, plus a $4 premium, might cost $45 plus a $15 premium when the crisis goes mainstream. This is your survival manual for the controlled demolition of the silver paper markets. Save it to your private library. Now, let me address the elephant in the room. Why isn't this story all over CNBC and Bloomberg and the Wall Street Journal? Simple. Follow the money. The major financial media companies are owned by the same institutional investors who own the big banks. JP Morgan Chase is one of the largest advertisers on financial television. They're not going to run stories about JP Morgan manipulating the silver market. The financial advisors aren't talking about it because they make money managing your stock and bond portfolios. If you move money into physical silver, they don't collect management fees. They'd rather keep you in their 60-40 portfolio and collect 1% annually forever. The government regulators aren't talking about it because the CFTC and the SEC are staffed by former Goldman Sachs and JP Morgan employees who plan to go back to those firms when they leave government service. They're not going to bite the hand that feeds them. This is a classic case of incentive alignment. Everyone in the official financial system benefits from keeping you in paper assets. No one in the official system benefits from you owning physical precious metals that you control yourself. But independent content creators like Power and Currency don't have those conflicts. We don't manage your money. We don't work for the banks. We don't need approval from corporate sponsors. We can tell you the truth because we're not getting paid to lie. The truth is this: COMEX is dying. The paper-silver market is running on fumes. Industrial demand is overwhelming mine supply. Above-ground inventory is being depleted. And instead of letting prices rise to balance supply and demand, the exchange controllers chose to rig the delivery mechanism to prevent price discovery. This manipulation cannot continue forever because physical reality always wins. Industrial users need real silver for solar panels and electronics. They can't manufacture cell phones with paper contracts. When the shortage becomes undeniable, physical silver prices will gap away from paper prices permanently. But here's the final warning. The window to position yourself is narrower than most people realize. The delivery rule changes are already in effect. The inventory depletion is accelerating. Large investors like Margaret Chen's pension fund are already discovering they can't convert their contracts to metal. When this story breaks into mainstream consciousness, and it will, everyone will want physical silver at the same time. Dealers will be overwhelmed. Premiums will spike. Delivery times will stretch to months. The silver you can buy today might not be available at any price when the paper market collapse becomes obvious. If you're watching this and you understand what I've explained, tonight is the night. After dinner, sit down with your spouse or your financial partner. Open a notebook. Write down exactly what silver exposure you currently have. ETF shares, mining stocks, futures contracts, physical coins and bars. Next to each position, write down whether it's actually silver or just a promise to deliver silver. Then make a plan. How much of your paper silver are you going to convert to physical metal? How much physical silver do you want to own as a percentage of your total assets? Most precious metals experts suggest 5 to 20% of your portfolio in physical metals. Given what we know about the COMEX situation, I'd lean toward the higher end of that range. If this video opened your eyes, or scared you, or made you angry, do 4 things before you close the app. Like the video, so the algorithm shows it to more investors who need this information. Subscribe to Power and Currency and hit the notification bell so you get the next silver market update the moment we publish it. Comment with your current silver position. Tell me what form it's in and what state you're in, because delivery logistics vary by location. I read every comment and respond to the serious ones. We build our analysis together as a community. Share this video with one person you know who owns silver investments. One person today. Send them the link. The COMEX manipulation affects everyone in the precious metal space, and most investors have no idea what's happening behind the scenes. The paper markets are rigged. The delivery system is being sabotaged. The mainstream financial media won't tell you because they're paid not to. But the tools to protect yourself still exist if you act before the manipulation becomes impossible to hide. Physical silver, bought from legitimate dealers, stored outside the banking system, is still available at artificially suppressed prices. But that window is closing fast. I'll see you in the next one. Stay sharp, stay suspicious of paper promises, and remember, if you don't hold it, you don't own it. This is Power and Currency, where we follow the real money trail. Until next time.